A good auction in the periphery of Europe saw a good level of risk appetite being brought back into the market. We had the rally on the rand coming through on the back of that news. Overall, one can only assume that the news has been well received and setting up much expectation and anticipation ahead of the Italian bond auction this afternoon.
Yes, indeed, Alishia. We did see that rand rise to some of its highest levels in over a week on the back of those successful bond and Italian auctions, as well as the local manufacturing data, which came out better than expected. And this really boosted confidence, especially since the yields declined at both those auctions. We saw emerging stocks and currencies also benefiting from that boosting confidence. And we did see that rally extend after the local manufacturing data came through, and that rally continued to extend this morning as well. But given the fact that there's a number of scheduled talks by Fed officials today, it could really temper expectations for the currency going forward.
We've also seen some of those expectations tempered by negatives that emerged in the form of a ratings warning on France. That's nothing really new, but then US jobs numbers as well, and then the retail sales numbers out of the US as well.
Yes, we did see the US retail sales numbers come in lower than expected, and the fact that the unemployment claims out of the US was also increased last month is really an indication that the US economy could possibly be struggling into the first quarter of this year, especially if you consider consumer spending and the fact that the US consumer contributes about 70% to GDP. So we could possibly see a softer first quarter number come out from the US economy, and the fact that there still remains some challenging times ahead.
You touched on the fact that local data yesterday played a part in buoying the local unit. To what extent did the markets actually pay attention to our own positive data that emerged in the form of manufacturing numbers? We saw manufacturing increase by 2.6% year on year in volume terms, compared with an upwardly revised 1.2% expansion over in October.
Well, we did see some direction. Well, the rand takes some direction from those numbers. Expectations were for an increase of 1.3%. Came out as 2.6%, as you indicated. And it's really an indication again that the local economy could possibly prove more resilient than what was initially expected. We did see the PMI numbers for November also indicate that the manufacturing sector could possibly be a little bit better than what was expected. But going forward, we could see some pressure come through in the first quarter of this year, and that could really bring down some of our GDP data going into the remainder of this year. We are currently expecting GDP could possibly come in at about 3% or possibly even below 3%. But the manufacturing sector is expected to have contributed fairly positively towards the final quarter GDP numbers.
Yep, certainly that. The broad consensus and the hope out there that economic growth in the last quarter of last year might have improved from that 1.4% quarter-on-quarter growth that we saw in the third quarter. Shireen, with that, let's take a look at the rand's levels that you've got pegged out, because some saying that next resistance has been pegged at around about the 795 level, which is its previous high, and of course a 300-day moving average.
Well, we are expecting, if the rand continues in the same direction that it has been, and if it reaches 8 rand to the downside sustainably, we could see a move towards 796 and possibly 785. However, if conditions does deteriorate in the Eurozone and the United States, we could see that level reverse, and we could possibly see a move towards 8 rand 11 and possibly even 817.
Let's throw forward a bit, because today pretty quiet on the market scene, but next week it's certainly a busy week here in South Africa. A slew of economic data being anticipated, and then of course that all-important MPC decision too.
Yes, with regards to the MPC decision, Standard Bank is of the view that the interest rates will possibly remain on hold at 5.5%, given the fact that inflation is still a bit of a concern, and the Monetary Policy Committee has indicated at its last MPC meeting that the inflation is expected to continue in an upward trajectory. Next week's CPI data is also expected to reflect that the December numbers came in at 6.3% from the 6.1%. So we're expecting an average for the year of about 5%, but it is expected to move to 6.2% for average for 2012. And on that basis, we're expecting the SARB to remain on hold next week.